Hey guys, it's Sal Bossio with Mortgage Universe, where real deals get done. Today I wanted to talk about bank statement loans. Bank statement loans are great for those who are self-employed, who own their own business, who may not be able to get approved the traditional way with tax returns and pay stubs, W-2s, etc. The reason for that is likely because you found enough write-offs to deduct against your income, where on paper it doesn't look that great. You might have a very successful business, but it doesn't mean that your taxes will reflect that, right? So what we do is we get you approved based on the income deposits on your bank statements. So if you have a business account, I have some lenders that will do up to 90% of the income deposits, depending on the type of business, how many employees you have, if you rent or own a space, etc., stuff like that. Some lenders will, we don't just use 100% of the bank deposits because we have to account for some expenses that your, entity, that your company might have, right? So there are some lenders that will use an automatic business expense ratio to assume, well, we got to take away at least 20% of the income. We got to take at least 30, 40, 50% of the income. Most lenders will do a 50% business operating expense ratio, meaning 50% of the deposits, or meaning 100% of the deposits, we will basically just use half of that, right? If you're showing $100,000 in deposits on average over the last 12 months or 24 months, they're going to basically divide that in half. I do have some more aggressive lenders that will go up to 20% automatically, and that's without needing any CPA letter to show that. These lenders who are pros in the non-QM space will look at the business profile. You'll fill out a quick little one-page business narrative and tell them a little bit about your business, and in many cases, they will only deduct 20% of that income. Depending on the lender, depending on your business and what your needs are, whether it's a purchase or a cash out or a rate term refinance, we'll have to figure out which lender would work best for you, but that's on me. But anyway, business bank statements, we use the income from the bank statements to determine your income, which is actually a really fair way to determine your income and not have to resort to tax returns or pay stubs or anything like that. If you have like a small business, like you're a hairstylist or something like that, and you use your personal checking, in some cases we can use 100% of the deposits, depending on, again, the structure of your business, depending on how that business narrative form looks. But really that's it. I mean, there are some other documents that we would request for the business, for these type of loans. Like we would want to know your ownership. We would ask for the articles of organization or articles of incorporation with your SS4 EIN form that shows your tax ID number when you first start the business or when you first build the business. And of course the operating agreement, which basically if you have a partner, tells us, the responsibilities of those partners. If it's 50-50, if it's, if there's three partners at 33.3% each, etc. We just need to know like what kind of business ownership you have, obviously. So it's a very simple way to get approved. The rates are a little higher than the normal conventional rates. So what you're seeing online, for conventional rates, it's not always going to be a reflection of what your rate might be because you're self-employed. It is the non-QM space. So the rates are usually at least a half a point higher, sometimes more, just depending on your situation. If you only want to put 10% down, if you want to put 20% down, if you're going to put 25% down, all these different things will affect, the interest rate. But the point that I'm trying to make is you don't have to count yourself out of getting approved for a home, for a primary home, if you want to buy a second home. Obviously, as we've talked about in other videos, we've got DSCR loans and stuff like that as well. But if we're trying to get you approved for a primary home, mainly, based on your income deposits, it's still possible.